Good morning, everybody. Thank you so much for joining. My name is Jenna Witherbee, and I am one of the advisors at 401k Plan Professionals. Today's webinar is a part of our fiduciary training series, and we're talking about fiduciary best practices beyond the fundamentals that I covered back in February. So most people don't realize when they accept their position, accept their role, that they will be a fiduciary and have many different fiduciary responsibilities. But a lot of HR professionals, controllers, CFOs, business owners find themselves managing retirement plan assets. And so this fiduciary training series is to give you the resources to be able to do that job well. Again, my name is Jenna Witherbee. I am one of the advisors at 401k Plan Professionals. If you're not familiar with our team, we spend all of our time supporting corporate retirement plans, and we help plan sponsors as well as their participants in the plan. And so throughout the time today, you will get a really good look at what our team does and how we can support you. So again, this is a part of our fiduciary training series. These are held 3 or 4 times a year. And so our next one will be Fiduciary in Action. I'm kind of doing more of a case study with different plan sponsors, and that is in October. A recording of this will go out to you afterwards, as well as a survey that'll pop up when you exit out of here. So please fill that out. That is how we get feedback and ideas for future trainings. All of our past trainings are out on our website and our YouTube channel. You will also get a fiduciary guide, a checklist, and then you can go through an optional credential. I'll explain more about that at the end. Here was the series we did last year. We ended up splitting it up into 101, 201, and 301. And these recordings are out on our website and our YouTube channel. Now, this year we have split it into fundamentals, best practices, and then fiduciary in action. All right, so I'm going to put a poll up. Rate your confidence when it comes to discussing who is a fiduciary and your own role and responsibilities. Just give it a few more seconds here. All right, so kind of across the board, a majority of people are a 5 and up, but that is very helpful for me to kind of know the audience and where to focus. All right, thank you. So a couple basics before we dive in. What is a fiduciary? It's a person or an organization that is required to act in the best interest of another party rather than their own financial interest. And you yourself are probably a part of your organization's retirement plan. But when you serve on the retirement plan committee, when you are a fiduciary, it's really, really important that you take off your own personal, participant hat, and you are wearing the hat that is required to act in the best interest of everyone in the plan. And here's some other examples of fiduciaries. So in general, again, it's an individual or an entity who exercises discretionary authority or control over the management of the plan and the plan assets, provides investment advice for a fee. This is where our firm falls into play, and then has any discretionary authority or responsibility in the administration of such a plan. And then back in February, when we covered the fundamentals, we talked through the top 10 responsibilities of retirement plan fiduciaries. So again, acting in the best interest of participants. We talked about following the plan document, a lot about care, skill, diligence, making sure fees are reasonable, etc. So if you want, that is a really great recording to go back and really focus on that foundation of the responsibilities of being a fiduciary. Now, today we're going to go a little bit deeper and talk about some best practices with documentation, insurance, audit readiness, monitoring plan fees, and education. So first, documentation in your fiduciary file. One of your responsibilities is to make sure you document your legal plan documents like your adoption agreement, summary plan description, and any pertinent amendments to your plan. You need to document your investment selection and monitoring process. There are required documents that the provider will help you with, like the fee disclosure. Um, you need to show vendor due diligence. So, are you benchmarking your providers periodically and have committee meeting minutes and communications with service providers? One of the things that we do is we put together the committee meeting minutes. I know a lot of plan sponsors really appreciate that, and that's something that we can kind of take off their plate from a documentation standpoint. Now, your record keeper, your provider that's holding the plan assets, they do maintain operational records, but that doesn't necessarily mean that they are creating a fiduciary file and keeping track of all the other documentation for you. Some do kind of have a fiduciary vault or a file that you can utilize, but it is important that you don't just rely on the provider. With the recent Secure 2.0 legislation, I wanted to mention that over the past few years, as provisions have become effective, plan sponsors must operationally or had to have operationally adopted the mandatory provisions at the time that they are effective. However, the official plan amendment isn't due until 12/31 of 2026. So sometimes that happens where operationally you may be acting in a certain way, but from a documentation standpoint, the plan document isn't amended yet. So this was an extension of a rule from 2025 to give plan sponsors a little more leeway, a little more time to get that plan amendment done. So if you are a plan sponsor, you probably have been in contact with your provider on their process or timeline, or you will be in the second half of this year. Insurance and protection layers. I wanted to make the distinction between two common types of insurance and bonding requirements. So one is an ERISA fidelity bond. This is a form of business insurance that offers the employer protection against losses that are caused by its employees' fraudulent or dishonest actions. And if you've ever filled out a questionnaire for your annual compliance testing, this is one of the questions on there. Do you have an ERISA fidelity bond? And then do you have the proper amount of coverage? You have to hold coverage that is equal to about 10% of plan assets, up to 500,000. And then ERISA fiduciary insurance is different from that. That is not required, but it is advisable. And this is insurance protecting individuals charged with the responsibility of administering benefit plans. So two different types of insurance there. Audit readiness is really a best practice as well if your plan requires an audit. There's two types of 401k plan audits that could apply to any plan, and then I'll talk about an individual plan audit in a moment. But DOL and IRS audits could happen at any time for any plan. They're pretty rare, but part of what we do from a documentation and a process standpoint is if you were to get audited, you need to supply the documentation showing, we're responsible for investment due diligence, making sure our plan is operating how our documents say that we should, make sure that we're benchmarking fees, et cetera. All the things that we talk about, you want to be able to show and prove that you're doing these things. So a Department of Labor audit could occur to ensure compliance with ERISA and protect participants' rights. And then IRS audits are to make sure that you're in compliance with the tax code. These are separate from general corporate audits. And it's important to note too that if you are audited, it doesn't mean that they think something is wrong. They can just be completely random audits. Now, your plan may also require an independent audit, a large plan audit. This is for plans with over 100 eligible participants, and this is conducted by an independent qualified public accountant. Some companies use the same company that does their general audit as kind of a tack-on service, or you could completely hire a separate company. They would review financial statements, contributions, distributions, compliance. If they do issue an opinion, any issues may require corrective action. So if you're a plan sponsor of a large plan, you're probably pretty familiar with this process. And there is work and time involved, and they can be expensive. We're more than happy as well to help you obtain quotes from different audit firms. So preparation for an audit or investigation. So here's some of the major areas they're looking at. Timely deposits is really, really big. That is probably the number one thing they're going to be looking at, making sure you're accurately and timely depositing the employee contributions into their accounts, ensuring participants are receiving timely statements and disclosures, compliance with the fidelity bond requirements, timely and accurate filing of Form 5500, reviewing of fees and expenses paid, making sure you are acting in accordance to your adoption agreement as well. So your adoption agreement says this is your eligibility requirement, making sure you are putting people into the plan as you should if you have automatic enrollment provisions, things of that nature. Also, if you do have a random DOL or IRS audit, if you're a client of ours, make sure to let us know right away, and we can assist you in compiling all the required documentation. All right, so monitoring plan fees. You must understand what fees are being paid, who is paying them, and what services are being received for them. You also need to benchmark the fees and make sure that the fee you're paying is reasonable for the services you're receiving. So you don't necessarily need to have the cheapest plan on the block, but you need to have reasonable cost relative to the value delivered. And this is something that we do for every single committee meeting for our clients. We have access to some really good benchmarking analysis, so we can not only highlight what your fees are, broken down by investments, record keeper, TPA if you have one, and then our advisory fee, but we can compare you to a universe of similar sized plans. This is just an example, but this plan is about 16 million in assets. It's being compared to about 400 other plans ranging from 11 to 20 million. And so we look at the plan fees in the purple column, and then the benchmark group is broken down into low, average, and high. And so you can see how the total fees compare. I like this report because it also strips out the different pieces. So you can see how investments compare, how the provider fee compares, how the advisor fee compares. And this is just another way to graphically look at those fees. And it is important to note, we benchmark our own fees. And so we keep ourselves in line. We lower our fee as plan assets grow to make sure that we are in line and charging a reasonable amount as well. And we can go to your providers and help you negotiate with them. It's really helpful having benchmark data, as just kind of another way to show providers, here's where you are, here's where the others are falling. Is there anything that you can do to make sure your fee is more reasonable? Another way to benchmark plan fees is to go out to the marketplace and actually get quotes, do an RFP. And again, this is completely an example, but we can look across many different providers, say for this plan and the investment lineup shown, how much would you charge to record keep the plan? And we can do a deep dive on all of their services, who their support team would be, look at their websites, look at their apps, look at their operations. But that's another way beyond just that general marketplace comparison for similar plan size. This is to say specifically for our plan, exactly how much would you charge if you had this plan? Also, on the topic of fee benchmarking, we take a look at the investment expense as well, and we want to make sure that those are reasonable. There are many different share classes for mutual funds that have different amounts of revenue sharing or credits that can go back to the provider and can also flow to the advisor. And revenue sharing with investments is very common, and there's nothing wrong with it. It's just one way to basically build in your plan fees. Some plans opt for zero revenue sharing fund classes. So share classes of mutual funds that have no revenue sharing built in. It's the lowest cost version of that mutual fund. And then you can just add on a level asset charge for the provider fee or for the advisor fee. So that's something that a concept that is becoming more common, even in small and mid-sized plans, using zero revenue sharing funds and even collective investment trusts, CITs, just to offer greater transparency to plan participants. There's also something called a pooled employer plan. So instead of being a individual standalone 401k or 403b plan, you can join a pooled employer plan to create one large retirement plan. And this can be advantageous for plans of all sizes. And a big misconception is if you're in a pooled employer plan, you all need to have the same plan design, match formula, profit sharing. And no, you can still have your own plan document with your own plan design, plan provisions, eligibility requirements, distribution options, match formulas. But from an administrative standpoint, you're able to create a lot of efficiencies for all of the employers that are participating in the PEP. It still offers great flexibility with the new Minnesota state mandate coming for all employers with 5 or more employees, very similar to what many states are doing. We know that we will see a lot more new plans pop up in the marketplace because of this. The state mandate says you need to either join the state IRA program or have a retirement program of your own. And so a PEP, a pooled employer plan, is just a solution for employers if they don't want to have a single individual standalone plan. So just wanted to mention that too, just from a fee standpoint, that's something that we can help you look at. This is just an example, but a $7 million plan with 34 participants. As an individual 401k plan in the current column, you can see that the record keeper fees are 21 basis points plus a per head fee of 3 basis points. Average investment expense in the purple is 36 basis points, and then the advisor compensation, giving it a total annual expense of 85 basis points. When this plan got a quote from the pooled employer plan, you can see that all across the board, the fees went down. So record keeping fees, the per head fee stayed the same, but average investment expense and advisor compensation all went down. So creating a lot of cost efficiencies, which in the end means more money in the pockets of the participants. So less taken out of their investment performance. Not every plan necessarily looks this way. When we quote individual plan to the PEP, again, this is just an illustration, it's just an example. But I think that's worth mentioning, especially if you're looking for some administrative pieces to be taken off your plate. Another example is if you really find your large plan audit to be cumbersome. In a PEP environment, there's just one audit for the whole group. And so there still is an audit, but you have less of an active role in that process. And more than likely, it's comes at less of a cost to you as well. So those are some things we can talk about as well. And then lastly, educating participants. Under ERISA law, fiduciaries are responsible for ensuring participants receive any required annual disclosures, clear information, and sufficient education to make informed decisions. There is a wide range, I would say, as far as the education, whether it's more simple and bare bones or if it's more robust. And our team really has a passion for the education, really supporting participants' ability to understand the plan and to maximize it for their own retirement readiness. And we're really creative and we make our communication fun and not boring and action oriented. We also get a lot of questions and feedback. Here's just an example of a question that came through on a one-on-one sign up. I honestly don't really understand anything about this. Sometimes people come to us and they have specific questions about their specific situation, and oftentimes people just say, I don't even know what to ask. I don't understand a lot about this. Can you just check everything over and let me know that I'm on the right track? So we do a variety of different education, group and individual meetings, in-person, virtual, small group, large group, one-on-one, live presentations, pre-recorded presentations. We do a lot with custom flyers and handouts and QR codes to make things action-oriented, and targeted communication as well for different stages of life. Financial wellness is something that's become a lot more popular over the last 5 years. Organizations are really recognizing that financial wellness is definitely a key part of overall wellness. Their employees are less stressed, more focused, have better mental clarity and well-being when they feel good in their financial lives. And really, viewing the 401k or 403b plan as a benefit that they want their employees to use so they feel better financially and more stable. So again, we do things in a variety of formats. It really just depends on what works best for the company and the demographic and their maybe geographical spread as well. We do a lot of one-on-ones, and we have a platform called One's Hub where individuals can sign up for, say, a 20 or 30-minute meeting with us. It puts it on their calendar with a link, and this is a really great way to screen share, log in together, go over everything on their accounts, and answer any questions that they have. We also created a financial wellness series from years of talking to people and hearing a lot of the same struggles and questions. We created these 8 steps, and actually each one of these steps has a short video as a part of a series, and they're meant to be prioritized in order. And this is a great takeaway too for people, kind of homework, if you will, and they can watch these little mini videos. And there's even a worksheet that goes along with the videos as well to give people some tangible steps that they can take for their financial lives. Here's some, I would say, more creative examples. An HR department had me record a enrollment video that they embed and they send out for all of their new hires. We can embed a message into existing meetings. So say you meet virtually the first Friday of every month. We could have 10 minutes as a carve out in one of those meetings. Each year decide on different topics, kind of an education campaign, custom videos based on what's going on with the plan. Maybe you change something about it or have a conversion coming up to a new provider. We can do some custom education there. Series of short informational videos for an app or an intranet if you use one for your staff. So we're always happy to be creative and try different things. All right, poll number 2. What area that we discussed today do you believe that your plan fiduciaries could improve on? So please take a second and answer. And maybe it's something else other than what is shown. You could also drop that in the chat. It's not about being perfect, but I think just recognizing what are some areas that we want to get better at and hone in on. All right, so really, every single category had some responses. So, audit preparedness came in number one, but otherwise, pretty much a mix between the others: documentation, monitoring the fees, participant education, and insurance protection. We have done webinars in the past on specifically audit preparedness, and that is a topic that we do like to hit on periodically. Um, All right, so just as a reminder for attending today, you'll receive a fiduciary guide and a checklist from our team. There's also an optional credential available at no cost to you. It's called the Fiduciary Essentials for Defined Contribution Plans, and it's a series with 3 sessions, 3 quizzes, and a course assessment at the end. This is just nice to have in your fiduciary file, whether you go through it once or maybe it's something you want to do periodically. But it is really nice to just further your knowledge on being a fiduciary and help you feel more confident in decisions that you make. There's also some additional resources that you get from this training. Okay, so our website is 401kplanprofessionals.com. You can find us on YouTube, 401k Plan Professionals. And as I mentioned, all of our previous webinars are out there. There's a lot of on-demand education for you as a plan sponsor, as well as for your staff. Looking ahead, we have a couple of plan sponsor focused webinars this fall. Feel free to register for those. And then we have a number of webinars that are for everybody, plan participants and plan sponsors. Here's our entire 2026 webinar schedule, so you can see if anything jumps out at you. I always tell people too, you don't have to attend live. If you register, you'll get the recording sent to you, as well as can go find it, online or on our YouTube channel afterwards. Thank you so much for attending today. I really appreciate your presence and your attention. And just as one last reminder, some upcoming webinars.